Can you pay my bills, pay my automobiles, pay my telephone bills, pay my supplemental bills? What's going on, guys? This is Minh with What's a Mortgage, and tonight I'm going to ask you to pay my supplemental bill. You're probably asking, what are supplemental bill? Tonight we are going to get into that. If it's your first time tuning in, do me a huge favor, hit the subscribe and notification button so you're notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 o'clock, Tuesday night on Instagram. Also, if it's your first time tuning in, do me a huge favor. Interact, engage. This is an engaging channel. So if you have mortgage questions, we have mortgage answers. And tonight, we're going to answer a question that's been asked week after week. Supplemental tax bills. What is this supplemental tax bill? You bought your home, you got other costs, but all of a sudden this supplemental tax bill pops up in the mail. And it's like, this must be an accident. I already have impound accounts. They're using that money to pay my supplemental tax bills. Nah. So tonight we're gonna break down what are supplemental tax bills. Do you have one supplemental tax bill or two? Is this an ongoing thing? How can I avoid supplemental tax bills? So tonight it's property taxes 101. For all of those who are watching, who had a lot of questions on supplemental taxes, do me a huge favor. Save this video, share this video, and like this video. Also, if you know anyone who just bought a home, who's gonna buy a home in the future, definitely share this video with them. Tag them on this video. If you're a realtor out there and you can't explain supplemental taxes, this is the video you need to share to all your clients. If you're a loan officer, watch it over and over again. But at least you'll understand what to tell your clients when they ask you about supplemental tax bill. First, we're going to talk about supplemental tax bills in California, the rules and regulation. But if you're not from California, stick it through because you're still going to understand how do supplemental tax bills work. They go throughout the nation, but we're going to show some rules first in California because most of the audience that does watch What's a Mortgage is from California. But we do need to change that, though, audience. If you're not from California, share and save this page. All right, guys? So before you understand supplemental taxes, you have to understand Proposition 13. In California, a lot of people say, oh, my home gained so much in value, they're going to raise my property taxes. If I get reappraised or remove my appraisal, they're going to raise my property taxes. No, they are not because of Proposition 13. Because of Proposition 13, every year, they're only allowed to reappraise your property by 2%. So you bought it for 400 grand, every year they add 2%. And if you do the math, which we'll show you in a second, it's barely changing. So because of Prop 13, if your home goes up in value, they are not going to come out and reappraise the property. They reassess it every year at 2%. So that's the first thing you need to know about supplemental taxes in California. Outside of California, in some states, they don't raise it at all. Some states, they raise them in different occasions. But in California, they're only allowed to increase it 2% a year unless something happens, which we'll go over in a second. So understand that. California, Proposition 13, you're protected. Because home values goes up so high in California, you're protected with Proposition 13. So if you guys see that on a ballot to discontinue Proposition 13, you better all vote no. I'm not picking a side, but Proposition 13 is really important to homeowners in case they want to bump up our state taxes somehow. Second thing you got to know, things to know in California. Our property taxes are filed every fiscal year. Regular calendar year is January to December. Fiscal year goes from July to June. And there's 2 installments of taxes. Even if you pay your own property taxes or your lender pays your regular property taxes, just know it's from July to June. So there's 2 installments. The first installment, which is July to December, the first 6 months, is due December 10th. The second installment is due in February, late in April. This is for January to June. The second installment. When they collect your impounds, they're going to pay it twice a year. It's going to be late December 10th or late April 10th. Just know that from July to December, it's the first installment. From January to June, it's the second installment. In other states, they can do it differently. They can do it calendar year, quarterly, I don't know. But in California and a lot of the West Coast states, they follow the fiscal year. So those are the 2 most important things to know about property taxes and supplemental taxes in California. Prop 13, only 2% allowed a year. And the second thing, fiscal year, you pay your property taxes twice a year. It's late December 10th or April 10th. So now that we got that out of the way, what are supplemental taxes? Supplemental tax bills are one-time tax bills which occur when there is a change in ownership on a property. So for those of you who, oh, they're going to bring up my property taxes if they reappraise a property. No, property taxes are going to go up if values do go up. They don't. I see that in the comments all the time. That's the reason why I have to throw this out there. People who can't afford a home or don't own a home in California, oh, you bought a home, oh, I pay rent, but you have to pay higher taxes every year because of Prop 13, you're protected, okay? So unless there is a change in ownership, supplemental taxes occur when there is a change in ownership. So if you own a home and you sell it to another person, they're going to reassess the property on the new value and give you something called a supplemental tax bill. Also, if you own a property, but you add someone else to title from the original lien, let's say one person stays on, you add a different person that wasn't on it, that is a change of ownership, and that raises your property taxes, your supplemental taxes. Here's a visual. So that you bought your home for $400,000, or you're about to buy someone's home and they bought it for 400 grand, but now you bought it for 700,000. The supplemental tax is the difference from the original person's purchase price. You know how I reassess 2% a year in California? In other states, it might not reassess. So it's from that purchase price minus the new purchase price. If someone bought a home, let's say 40, 50 years ago at 100,000, you bought it at $1 million, there's gonna be some crazy supplemental taxes. If you wanna know what's my supplemental taxes gonna be, talk to your realtor. They can probably pull up the last time the property was reassessed and find out what the property was assessed at and what you're buying it and subtract the difference. So if you are selling a property, when that person buys it, they're gonna pay supplemental taxes. With this being said, when you do buy new construction, that's when it gets crazy. When builders buy the property, they buy the land, it was assessed. Let's say it was assessed at 80 grand, 100, like let's say 80, 100, depending on how much they bought the land for. And then all of a sudden you come in and you buy the property. It's a huge assessment. So when you buy new construction, understand you will pay a pretty substantial supplemental tax bill. It is the value that you're buying it from, value you're buying it for from where it was from. If you're selling it from where you bought it, from where you're selling it at. Here's the math behind it. Let's say we go to our example, 700,000. That's what you bought it for. And it was assessed last at 400. So the difference is 300. Here's the math. It's 300,000 times your tax rate. So we'll use an example of 1%. The nationwide average is 1.07. If you're in California, I know it's 1.25. Certain places might be a little bit higher. In Texas, in New York, New Jersey, it's 2.5. So it's the supplemental portion times 1% times the amount of the months you own it. So let's say you own it for 9 months on the prior year. Let's say you bought it in October. Remember, October goes till June. It's fiscal year. That means you own it for 0.75 from the last time it was assessed. You're gonna pay 0.75. If you bought it, there's only 1 month left in the supplemental. Different story, which we'll go in a second. Okay, so you own it for 3/4 of a year. So it's the supplemental portion times your tax rate times the amount of time you've owned the property for. That is your supplemental taxes. Another thing on top of your supplemental taxes, let's say the other owner already paid the regular tax bill. When you do close escrow on the house, if the taxes have been paid already, you're gonna owe them the portion when you took over the house. So let's say you closed in October. Let's say if they already paid October, November to the end of the year, you're gonna pay them the difference if it hasn't been collected by the prior lender that paid the tax bill. So that is our supplemental tax bill. So you ask them the question. People ask me all the time, well, how about my impounds? If I have impounds, will the lender take my impounds to pay my supplemental tax bill? And the answer is no. That is your new taxes that they're impounding to pay. The supplemental portion is the portion that got reassessed when you took over. So the property is reassessed every year in January. In California, in other states, I don't know, but in California, it gets reassessed. If you want to look on your title report from the lender or from title report from the title company, while you're in escrow, look at the last time it was assessed and the time you're buying it. That's going to be the supplemental. When they collect the impounds, it doesn't pay that. So you will go in and get a supplemental tax bill and you will pay it, right? Another thing, you can get more than one. In California, other states might be different, but seems like other states kind of follow. There's two things that can happen that can add another supplemental tax bill and increase your taxes. If you do home improvements that require permits. So a lot of you guys out there, you guys got a gang of equity. You guys are building ADUs now. When was the last time you got reassessed? And you go to the city and you get permits, and that's where they get you. They come out and they reassess the property based on today's value. So let's say you bought a home 50 years ago for 100,000. Now it's worth $1 million. You went out there, you did the right thing. You wanted to do upgrades to your house and you got permits. Boom. Now you're paying taxes on $1 million. So supplemental portion was the last time it was assessed. Let's say it was assessed at 200 grand. You bought it for 100,000. Every year goes up 2%, right? I'm just throwing out numbers. It's at 200 grand. You go out, you get permits. Bang! it goes up to $1 million. So you're paying the supplemental on 800,000, and then now you're gonna pay property tax on the $1 million. So be very careful when you go out and get permits. That's why it is pricier to do a renovation loan now, but long term, you're not worried about your property taxes going up when you look down the road, you want to do upgrades to your house. So that's very, very important for you to know that. Number two, if you add or remove someone from title. If you're going to gift your house to a family member who's not a parent to child or grandparent to grandchild, even though it's an inheritance from uncle to nephew, they are going to increase your property taxes. Okay, so if you change people on title, you remove someone to add someone else, it's going to increase your property taxes and give you a supplemental tax bill. I see it happen a lot. Someone co-signs for someone to buy a house. Down the road, that person wants off the loan, but they need someone else to help qualify, so they add another co-signer, and boom, there goes your property taxes. So be very careful to avoid these two events because it seriously will change your day. You only get sent a supplemental tax bill to adjust your home value when you follow a qualified event. Selling the house, doing home improvements that require permits, or adding or taking someone off a title. Let's say you qualify by yourself, you just remove somebody, you're okay. But if you take someone off and you add someone back on, that's where you're gonna run into heat, unless it's a spouse. If it's a spouse, you're okay. If it's a child or grandchild, you're gonna be fine. If it's uncle and nieces, uncle and nephew, no bueno. They will change the supplemental tax bill on you and the property taxes. All right, if there's anything you got out of this, and in the future, you're gonna be a homeowner, if you know anyone who's about to do some renovations and get permits, you want to show them this video right away. Not saying that you shouldn't do it, just understand you will get a supplemental tax bill and your property taxes will go up. People should share this more with people. The reason why I know I went through it, my dad, my brother, was added onto my parents' house. When we were added on, we didn't pay attention. Even though it was child, we didn't do it correctly because we did it through a corporation. It's a different story. Within 2 years, if you can't get it corrected, you can't turn around and get it corrected. So let's say you make a mistake and you are, oh my gosh, I did a boo-boo. By changing someone on title, adding a parent, a grandchild, or a child, putting in an LLC, and there's someone else on the LLC, not just you. Say you have a home, you're part of an LLC, and that person who was on the LLC with you is not on the original loan, they're gonna raise your property taxes. You have 2 years to correct it somehow. And if you don't, there's nothing you can do. I don't wanna talk smack, I don't wanna dry hustle, but they take their time on correcting it. They make it hard. They keep throwing stuff at you. They want that tax money. So I would try to do it right the first time. Don't rush into it. Especially, I see it happen all the time when people refinance homes from one person to the next or take someone on and off title. See it happen all the time. And all of a sudden, you bought your home years ago. You did a refinance. You added a co-signer to help you with your cash out or something like that. And all of a sudden, boom, whack. You have comments? Please leave below. We are going to get into Q&A in a second. One last thing about supplemental tax bill we're going to answer. So let you guys know, in California, it might happen in other states too, but in California, every January, the property gets reassessed with that extra 2%. Because of pandemic, a lot of counties are behind schedule, but if they were not behind schedule, this is how it works. Every January, you get supplemental taxes. Let's say 2022 in January. It's for July 22 to June 23. So that February, March, April, May, and June right there, you are paying last year's supplemental tax bill. When you get your assessment in January, it's from July to June. And here's the main question. Will you get 1 or 2 bills? So sometimes you get 1 supplemental tax bill, sometimes you get 2. If your loan funds from July to December, you're gonna get 1 supplemental tax bill. If it funds from January to June, you're gonna get 2 supplemental tax bills. So be prepared for that and prepare money ahead of time. If you are buying a house, make sure you time it right. Make sure you can skip 1 or 2 mortgage payments and take that money, pay off the supplemental tax bill. So that right there is everything you need to know on supplemental tax bill, especially from California. Rules might vary in different states, but the concept is the same. So you might want to Google on YouTube supplemental tax bill. All right, guys, was that helpful? Guys, if I brought you value, do me a huge favor, save this video, share this video, and like it. And for everyone who's already following me on Facebook, please follow me on YouTube and TikTok. I need the follows, all right? If I brought you any value, help me out here. All right, guys, we want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you guys so much and have a great night.